Hi, this is Ian Coleman from PIA. We're going to talk about sterling Swiss medium-term outlook, but also going to highlight a short-term entry level for this bearish medium-term outlook for this cross currency. The chart that we've got in front of us is sterling Swiss. It's actually a weekly chart. We saw a very aggressive sell-off. Actually 4,011 pips at the beginning of January, when the Swiss National Bank obviously pulled the Euro-Swiss plug. We've then seen quite a remarkable recovery. We've actually seen 8 weeks of gains, and this cross-currency pair moving up towards previous highs. Now if we just take this line here, we just put it across the support level from basically the latter end of 2014, we can see that we rejected what was support, then became resistance, and we rejected rallies up around this area. We then posted a weekly evening doji star formation, and we've seen 2 weeks of net losses. So the bias has now flipped to the downside. If we then pull in and just look at last week's Marabuzzo level, that's coming in around about 144.50, and we can see that this week's gains have been rejected around that level. Actually 144.49 was the high from this week. Last week's Marabuzzo was 144.38. So, big pip numbers here. So, 10 ticks is a pretty close rejection. Now an ABCD formation would take us down towards 134.45. The reason I'm highlighting that is because in shorter time frames this does look like a flag formation. These are Saxo Trader 2 charts, by the way. And also we've got this 136.90 Fibonacci level. Okay, this pullback level. So breaking down into shorter time frames, just going to go to the daily. Okay, we can see this sell off a little bit better. We can also note that all of these days from sort of this week and last week, we've got spikes in both directions, and that's quite common in corrective sequences or corrective formations where the currency pair is basically struggling for direction. Now if we break down again into 30-minute chart, we can see that all that indecision from the 26th of March has caused a corrective channel formation. Note as well that the formations inside this formation are in 3 waves, and that's common also in corrective formations. Today's price action, we actually saw a DMARC 13 count up near yesterday's highs, which highlights exhaustion. So that was our first warning sign, if you like, that this correction was coming to an end. Then we've seen some quite aggressive sterling sell-off this morning, and that's pushing us in the cross towards this this baseline at 142.78. What we're looking to do is either sell the break or sell a bounce in this cross currency. So a good short entry level is going to be around about 143.65. We're wary that we're probably going to get a bounce around 142.78. We've got a baseline here at 142.60, so not great risk reward to sell at current levels. We prefer to sell a bounce if we're not already in this this short trade. And like I said, talking about medium term target levels, we're going to be looking at 136.90, 134.45 for the flag target. Stops really above this support, now becomes resistance at 143.90. So, 143.82, so a stop coming in around about 144 the figure. Okay guys, we'll speak to you again soon.